How's it going, everyone? Hope you're all doing well. Can you believe it? 5 years on YouTube and never doing a live anything. So what we'll do, we'll wait a few minutes. We'll wait probably 5 minutes, let everyone join in the room, and then we'll get started. But yeah, hope you're all doing well, and hope you're all had a good week. Busy week for me. So I've been up in Edinburgh with my partner Thomas for Envision Markets, and we've just been trading together. It's been almost like a trading floor, and it's been a busy week, isn't it? It's been a busy week. We've taken a lot of trades, taken trade every day, which is very rare for me. So usually per week I'll have, let's say, some weeks I may not even take a trade, but 5 trades in a week is it's pretty heavy.
It's the trading floor magic.
Yeah, it is. It is. But it's been good fun, isn't it? Good fun, good vibes, good energy. It's been nice to trade together as well. And yeah, had a lot of good opportunities in the market. And next week is looking fire as well. So yeah, see what happens. What's your favorite for next week?
Ooh, you know what?
Pound yen for me.
Yeah, pound yen.
Pound yen.
It's lined up way too well.
Great higher time frame to lower time frame narrative. So
yeah, 100%.
it's looking good. And hourly is shaping up with the daily too.
Yeah. And
Hourly's
everything's
phenomenal.
It's just all
If that liquidity gets taken.
It's hard not to get excited. Like we
Yeah,
were saying
yeah.
Earlier, obviously.
Yeah, we had that live Q&A early,
live
didn't we?
Q&A earlier.
But yeah, we'll see what happens. Got to stay neutral, and it is in a key area on pound yen. Let us know in the chat, by the way. So my partner from Envision, Thomas, is going to be answering questions today. So if you've got any Qs or comments, just drop them in, and we'll be answering them. So it's going to be good. Give it another few minutes, and then we'll get cracking. Very key webinar today. Very few, lots of lessons, and you're going to come away with a new perspective on how to scale your trading. So really looking forward to it. It's going to be good.
It's going to be very good. Your first ever webinar. How's it feel?
Oh, feels good. I should have done this earlier. Should have done this about 3 years ago. It's good to connect with people live, though. That's what we obviously realized from the live Q&As and stuff. It's just good to speak to people. So we'll have to do some meetups in the future too. What are we on now? 58. Give it 2 minutes. But yeah, let us know how your week has been. Hopefully more successful than not successful. Let us know what trades you've taken. If you've taken any trades, or if it's been a quiet week, let us know. You know, market has ebbs and flows. You're going to get very strong weeks and you're going to get very weak weeks, but tends to balance itself out over the course of a month or a quarter. So no need to get too involved in individual trades. It's more about the sequence of trades that you take. So quick tip for you. I'm excited for this.
It'll be good. It'll be good.
Mm-hmm.
It'll be good to share the secrets with the world.
Mm-hmm. It's going to be good. People need to realize certain things. It's going to be good to release the truth.
So just before we start, you can answer a couple of questions yourself.
Okay.
What is your point of view of FTMO as a funding company in comparison to others?
I think it's definitely the leading prop firm right now. There's no real argue about it. People will have different perspectives, but yeah, I would say it's the leading prop firm right now. Very credible. But once again, don't put all your eggs in one basket. That's something that I would say. It's very easy to be like, FTMO, but you need to diversify. It's the best thing. Don't put all your trust and diversification into, one asset class or one prop firm. Spread your eggs. It's very important to diversify.
Yeah.
Good question, though.
A very good question. There's some people from South Africa all the way.
No way. Welcome.
So
welcome to the chat.
Welcome to the stream.
Welcome to the chat. Good to see people from around the world joining.
Yeah, for sure. Thank you for obviously taking up your Saturday night.
Yeah, 100%. 100%. We appreciate that you could be doing plenty of other things and watching Netflix or doing whatever you do with your Saturday night, but we are going to be dropping some value points in here that is really key.
Yeah. Right, one last one before we start.
Go for it.
One person asked, can you summarize how Envision Discord works?
Of course. So it's a like-minded community for driven individuals. We keep each other accountable, and the goal is to actually add that accountability in the space. You know, there's a lot of fluff in the space, and there's people who just so much misinformation in the space, and people need to realize the truth of how it actually is. So we're very transparent. We post a lot of MT4 screenshots, trades taken, which we'll talk about in a bit as well. And it's just a very good environment to push you to the next level, but at the same time offer that support that is needed within the trading space on your trading journey. Now, everyone needs to go through isolation points within their own trading. I've been through plenty of mine, but it offers that community to actually bounce ideas, mastermind with, and just get to that next level within your trading. So to summarize Envision, that is Envision. Envision your trading future.
I'm going to drop the link for Envision in the chat as well.
Perfect. We'll get started now as well.
Yeah, go for it.
Right, we'll get started. Right, so hopefully you can all see the screen. Welcome to the live webinar. This is the first webinar I have ever done on YouTube. Should have probably done it 3 to 5 years ago, but it's what it is. So the purpose of this webinar is to add value to your trading, right? So we want to create independent thinking that leads to data-driven success, right? Too many people rely on mentors, other people, and there's just so much misinformation in the space. You need to rely on yourself, because at the end of the day, you're the only person that's going to be paying your bills, taking the trades for yourself. So you want to create that independence for yourself. Now, stick around. At some point in the webinar, there's going to be an exclusive 20% one-off code that allows you complete access to Max Leverage Club. So one of our tiers in Envision, and it's going to be a one-off thing because this is not going to be recorded. So this webinar, after you've watched it, it's not going to be available ever again. So take note of when that drops. And like I said before, Thomas is going to be answering questions. So drop the questions in the chat, ask him whatever you want, and we'll be sure, hopefully, to answer as many as possible. I count on him to answer some questions. So yeah, let's get into it. So let's get cracking. So what is the problem, and why do most traders fail in the financial markets? Because it's such a big problem. As you've already heard the stat, 95% of traders fail in the first 90 days of trading. People flirt with the idea of trading, right? You're not treating trading as a business, and you're not paying yourself, right? I've talked about this multiple times on YouTube before, but the problem, especially in the SMC space, of people targeting these silly RR trades of 1,000 R trades, 100 R trades, whatever it may be, and they're just getting too caught up into the marketing that courses are actually offering. And it's a shame, because it will ruin their trading if they're not careful. And we're going to be touching on that in this webinar as well. You know, you got to think about it from the course standpoint. They're marketing this, and they have to come out with a new technique, a new lower time frame. I've seen people trade on the 1 second time frame, and it's just, in my opinion and my experience in the markets of 6+ years now, it's very silly and it's very ridiculous, and you're not thinking in scale. So we need to approach this from a scalability mindset. And of course, if you're doing that with 1 pip stops and 100 R trades, you're approaching it from a gamblish mentality. You could take 1 winning trade, but then followed by 10, 15 losing trades. So is it really a scalability model? And I appreciate, yes, you may be still in profit, but it's going to be so stressful to scale that model, right? You're not going to be doing it. And then you come into problems such as being filled on a larger account. You have to think high six, 7 figures. There's no way your broker's filling you on a 1 pip stop or a 2 pip stop. There's no way. It's just absolutely ridiculous. And then you have obviously higher commission and a multitude of problems that come with that as well. So you end up gambling with, you might as well go to the casino. You might as well head to Las Vegas, take your trading account, and just see what happens. It's the same mentality. So we need to think properly, logical and realistic. And that's what we're going to be talking about. And this obviously leads into no structure of trading. You know, if you're relying on mentors to, let's say, do markups, and you're following someone who takes 100 R trades, you end up having a lack of independence and a lack of structure to your trading. Because what you end up doing, and I've seen this multiple times in the past, where you just end up mimicking these mentors. So you try and take the same trades that they take, but it's never going to happen, because how you see the market is from your lens and your lens only. So to try and copy these mentors is only a losing battle, and it should not be done. And then that can lead into ego in the markets, and we've all seen this with different traders. you maybe even be able to relate to yourself. And if you have been egotistical in the markets, and I'm sure all of us have at one stage, I was the same when I first joined as well in the financial markets, just let us know in the chat. You know, it's relatable to everyone here. And then obviously that relates to a lack of journaling, lack of data protection, data collection, sorry, and just a multitude of problems. So you just have to just think about things logically, and you have to, this is why we create independence with our own trading, because like I touched on before, no one's going to pay your bills for you, and that's the truth. I can only help you a certain amount of time, same with anyone else in the space, but it comes down to you to actually execute those trades, manage them according to your plan, and scale that longer term. That's the most important thing, you know, so we really have to touch on this. It's super, super important. So let me be real with you. You've been lied to with these 100R trades, right? No one is going to be doing that at scale. I've seen very, very few people do that at scale, if anyone, right? You may be able to do this on £1,000 account. You may be able to do this and scale this to 5,000 account, 10,000, maybe even 20,000, right? But there's no way you're doing this on a high 6-7 figure account at scale. Your emotions are going to be wild. It's going to be such an emotional roller coaster for you. You're going to be very stressful. You're going to be pulling your hair out. You're going to be doing laps around the room. You're going to be throwing your laptop out the window. It's just not a scalable approach, right? If these traders were targeting 100R trades, and you have to think about this, why aren't they billionaires? Why are they not billionaires, right? If they're really getting these 100% trades all the time, how are they not billionaires? So you've got to be thinking about this from a logical standpoint. So what I want to do, I want to go into the markets, and we're going to be showing you 2 clear examples of a scalable yet simplified trading approach so that you can target less RR but have more success in the markets, right? Less stress, simplified approach. It's a win-win. So let's talk about it. So first, we're going to talk about pound yen, right? So we're going to touch on pound yen, and we're going to break it down from top to bottom. So let's take a look at this. Pound yen, what do we have? So overall, from a daily standpoint, it doesn't matter if you don't know the ins and outs of the style. I'm just going to show you the clear examples. So overall, from a daily perspective, what do we have? Well, price came in here and swept the previous weekly low, followed by the clear bullish initiation to the upside, breaking this point of structure. But how do we break? Did we break with intention, or did we break with manipulation? Manipulation, right? We finished with a very clear and obvious high test candle to end out Tuesday's day of trading, right? So this was very evident, especially in this high value area of this point of interest, that we're going to be moving to the downside, even if it's a daily reaction of price. Even if price moves 40, 50, 60 pips, we've got room to breathe and room to take trades. So from a daily standpoint, things were lining up very clearly. If we drop now to the 4-hour point of view, what can we see? So overall, we had a switch in order flow. This is what's really important, right? So we had previous high, high low, new higher high, but then instead of making a higher low and a new higher high, we had a shift in market structure. You see that? So we had a shift in market structure, clear intention to the downside, which then shifts our perspective to more so looking at shorts. So if we now take a look at the hourly chart, what can we now see? So we can see this was the OB that caused this shift in market structure. So this is what's known as the decisional OB. And as you can see, the vast majority of volume is contained within this area. And this is another myth that traders actually associate with impulses. A lot of the volume is not actually in these impulsive moves. A lot of the volume is in the ranges, is in the corrections. And that's something that really important. So go and test that. If you want to use this tool as well, we use it a lot inside Envision. Go and check out fixed range volume tool and pay attention to where the volume is accumulating. That's very, very important. But overall, from an hourly perspective, we had this lower low form, with clear intention, and then price correctively started pulling back into an area of value, which is this 1 hour supply zone, right? So this is where some of the lower time frames creep in. So this is where we can go to the 15-minute and we can take a look at the intraday perspective. So from a 15-minute perspective, what do we have? We have break above Asia highs, right? We have this little liquidity point in here as well, which you can always use this. So these stacked highs, and we have that Judas swing coming into London Open. So this was really valuable to take. Then from a 2-minute standpoint, right, what we had liquidation of the previous high in this area of supply. So high value area, remember, followed by intentional shift in market structure and the corrective pullback into the entry point, right? So let's just see how this plays out. Let's just play this out and we'll talk through the key lessons alongside this, right? So price, very intentional move to the downside here. As we can see, clear regression. You would probably, most likely, hopefully, be moving to break even and removing the risk or reducing the risk from the trade. Right, so price moves to around here, and at this point, it's running at 5.3% profit. Now you got to be thinking about this. If you're trading a bigger account at scale, are you happy letting this trade pull back to break even, or even maybe taking you out for a 1% loss? You have to be aware of these thoughts and these, key examples of how price can actually pull back to break even, right? So you've got to decide that for yourself. Everyone's going to be different, and everyone seems to think they currently think in scale, but unless you start hitting those bigger accounts, you're never going to be fully thinking at scale. And we have to think logically, right? If this is a £1 million account and we're running 50K, are you really going to be letting that pull back to break even without paying yourself or removing the risk entirely, right? Because you could be targeting these lows down here, maybe Asia lows at 9.9%. You could even be targeting, 10 to 1, these swing lows, natural target. But what if price pulls back from here? Are you not going to pay yourself, right? How is that a scalable approach in the markets? For me personally, I've experimented with multiple different management strategies along the years. It's much more important, and this is why I'm so big on it, paying yourself in the market. Because unless you do so, you're not treating this as a business. We're not gamblers going into a casino. We are traders, and we should be managing this as a business, right? So let's just continue playing this out. Right, so price pulls all the way back. Imagine that on a larger account. Imagine the emotional roller coaster of letting that pull back to almost break even. Goes again. Price reacts from this area, fails to break through upon first attempt. Reacts from this area too. And then all of a sudden, you're going through this emotional battle. You haven't paid yourself, and then you get taken out for break even, or even worse, a 1% loss, right? But your target was down here, right? So what you learn here is price doesn't have to do what you want it to do. People need to drop this ego in the markets of thinking, yeah, you know what? I can play the intentions. I can play the smart money stuff. I can trade like a bank. All these common terms that are thrown around in the trading space, and be targeting these silly RRs. Why are you not paying yourself, right? This is an important lesson. You're running at 5%. Why would you not either, let's say, target 3 to 1, maybe 5 to 1, and get out of the trade and have a stress-free, simplified trade approach, right? We have to think about this. Another example is Eurodollar. All right, let's have a look at Eurodollar and let's break this down. Get a quick sip of water because my mouth's getting dry. Let's touch on this. So Eurodollar, once again, from a daily perspective, let's take a look at this in detail. So where is price currently? At this point in time, we are located in this daily FU wick, right? Can you see that? Daily FU wick that takes out previous buy side liquidity, right?
Weekly, right?
Yeah, exactly. No, this is daily FU wick. Takes out previous liquidity and then initiates lower prices, right? And this ends up being a swing break of structure, right? So this is the key inflection point for price. And as we can see, order flow, still bullish, but we are looking for pullbacks or reversals at this point because we're now forming a new higher high. And we can see the momentum. Price is slowly starting to lose that momentum. We're starting to break previous daily highs. with lots of sweeps, lots of manipulation above this area, naturally looking for more shorts, right? Key area for price. Let's now drop to the 4-hour chart and let's take a look at this. So order flow is still bullish at this stage, right? So we've got higher high, higher low, higher high, higher low, higher high. Simple trend following, right? Very easy to read. So following a new high high, then looking for that pullback phase into an area of demand for potential longs again, right? Very simple. This is the way I trade, and it's very simplistic and systematic, and it's just so scalable over the long term. So what do we have? This range at the top of the move following this higher high, right? So there's a lot of volume in this area, which I will show you. We just take the fixed range volume tool. As you can see, a lot of volume in this stacking of orders here. And we have that breakdown in market structure from an internal standpoint. Then what do we have? Corrective pullback, price starting to stack lows here, which is just liquidity. This was the natural selling opportunity for price. So let's just start to build the picture down. Let's go to the 15-minute chart and let's touch on this. Once again, price in a very valuable area. Sweep of Asia highs here. Do just rally into extreme higher prices, and the entry appeared soon after that. Right? So this is a slightly different example, and I'll show you why in a minute. But once again, entry. Volume in this area. Very nice entry point to the downside. Taking the short narrative. Once again, we're just building the daily picture down to the 4-hour, down to the 1-hour, and just continuing with that narrative. So we get the entry, right? And you could be targeting Asia lows, you could be targeting swing lows. Let's say it's swing lows at 7 to 1. And let's see how this plays out, right? This is a slightly different lesson, but it's along the same theme. Look how quick price moves to the downside. So all of a sudden, in the space of 6-7 minutes, you're running at 4%. Not bad, right? But then what happens next? So we start to correct a little bit, slight pullback. And once again, I want to change your perspective and think about things at scale, right? This is fine on £1,000 account. You are not fussed. You're happy to just hold that, right? You're not fussed if it takes you out for break even. You're not fussed if it takes you out for 1% loss. But if this is at scale and you're trading this on 6-7 figures, the emotions are completely different, right? So we have to think about this. So price corrects, pulls back, drops a bit lower, still on track at this point, right? Once again, liquidity below this area, so it's building nicely here, still for lower prices. But then what happens next? Price pulls back into these sort of areas in a minute. Here we go. Right, so notice the pullback. Obviously, we've got liquidity stacked below here now. There's still a good likelihood that we may still smash through this area. However, you have to think about this from an emotional standpoint. Trading, once again, at scale. Are you going to be happy letting that pull back with the chance that you just let a 6% trade pull back to break even, right? If this goes now, you don't control the market. You're not a bank. You're a retail trader, right? So there's nothing stopping price moving up, taking you out for break even, and then all of a sudden you've let 60k pull back to break even. How are you going to be happy with that? How have you not paid yourself, right? So the key point here is scalability and paying yourself, because not many people in the markets do this. But if they did this, they would be much more successful. Think about this. Everyone comes into the SMC space and everyone starts to target these silly RRs with 2 pip stops. And, you know, I started to do the same when I first started SMC, and it was a mistake that I made, but I had to go through it, right? And they target these silly RRs. If they flip that perspective, because they're doing it backwards, instead, if they started to target with the same style, 3 to 1s, 4 to 1s, maybe even 5 to 1s, and then actually worked forward from there, then it's a different standpoint. Then you're setting yourself up for success. But targeting these bigger RRs, listen, you're setting yourself up for failure. So it's a very, very important point. And this actually did end up playing out, but it's more so the case of it's an emotional roller coaster. Okay? So it's something we really need to talk about. Another quick drink. Hopefully that hit home for a lot of you because that's really important. Right, so what is the solution? The solution is, like we've touched on, a simplified trading approach with less stress, right? It's mechanical to a certain degree. I still argue that certain discretion is still important from a narrative perspective, but overall, mechanical, repeatable systems in place for you to then scale that longer term. Everyone loves simplicity. If you can, scale your trading in a simplistic manner with no BS, no fluff, and a systemized approach, it's going to help you so much because no stress. You know what you're doing prior to even getting trades. You know how you're going to pay yourself. There's no stress. You're sat back, you're chilling, you're just relaxing. That's the most important way, and that's how trading should be. So that's important. So what I'm going to do is I'm going to set you homework. Now, this is not going to be attractive. Obviously, I'm not a school teacher setting you homework or anything, but this is going to actually elevate your trading to that next level. And I appreciate 100 trades, is something that people have got used to now. So me showing 3-to-1 trades, 4-to-1 trades, 10-to-1 trades is not as attractive, but the results will speak for themselves. I'm telling you. So what I want you to do is I want you to backtest 3 months of data on any given pair of your choice. So could be euro dollar, could be a pair that I like, dollar Swiss that I've recently added over the last few months. It could be gold, it could be USD. Start to collect that data and the results will speak for themselves, right? Then what I want you to do is, because it's free, join Envision and drop that from the before screenshot and the after results of how it's changed your trading, right? Note down how it's increased your strike rate, your win rate, your P&L, your overall consistency, and start to visualize yourself ahead of time, taking these trades in the live market. How do you feel? It's going to be less stressful, right? It's going to be very simplified. You can work on other projects if you want to besides trading because it's less stressful. So post those results in general chat and I will keep you accountable, and I'm looking forward to seeing each and every one of them. So that's really important. So I look forward to seeing each and every one of them inside general chat in Discord. Here's the thought. Something that I wish I'd had 6 years ago when I first started in the financial markets is just the ability to join calls with people and actually see their live thought process in the markets. See what they're looking at in the markets. How many wins, losses, break-evens have they taken that week? What struggles have they been through throughout the journey? How have they overcome certain barriers, certain limiting beliefs? How have they improved their self-image? All these things are super important to have, yet that experience lacks within the space. But how cool would it be to have access to that on a daily basis by going and jumping on calls, mastermind together and grow alongside them? It would elevate your trading to that next level, right? How cool would it be to actually see their personal lessons? See what they're thinking ahead of time. Now, how do they form the narrative? What things do they look for in the markets? Right? All these things are invaluable. You can't put a price on that. It's super, super valuable to have, right? So just like Thomas has been doing tonight, you've just been answering tons of questions. We have multiple years of experience in the markets, and these trades we've been going through. So we've been through euro dollar and pound yen. These are 2 clear examples that we've broken down. So instead of you joining the live webinar on YouTube at 6 p.m. and giving up your Saturday night, you can get access to this throughout the week on a day-by-day basis inside Envision, right? So this comes from our tier called Outlier. And we called it Outlier because these are outliers in the market. We're teaching you to think and trade differently from the vast majority of people to get and separate yourself from that statistic of 95% of traders fail in the financial markets, right? We want to get rid of that, get rid of all the fluff in space and teach you how to actually succeed in the markets. So that's key. So that's offered inside Outlier, but that's not even the creme de la creme inside what we offer inside Envision. What we have is a tier called Max Leverage Club, and this is our most extensive tier. It's for serious traders only, and it's primarily for people who want to develop in their journey. They want to elevate, they want to surround themselves with people on the same mission as themselves, and they really want to develop that technical edge in the market. So if you stick around, I'm going to be sharing very soon a 20% exclusive webinar only code that is going to be available just for you. So after this webinar is over, no one else will be able to access it, right? Yeah, it's not going to be recorded. And we're going to be capping this at 30 members, right? So we've already got 10 members, which means there's only 20 spaces left. So this could go in a day, it could go in the next 2 weeks, but ultimately, you're not going to be able to access that if these spaces are filled up. So that's really important to understand, right? So let me touch on, before I give you the code, let me touch on what we have inside MLC, what do you get, and some of the benefits. So first things first, you get the opportunity to see how we formulate daily markups, right? See how we formulate our narrative in the markets from a day-by-day perspective. We'll teach you how to do the same. We're very detailed, we're very transparent with what we share, and we'll be annotating the charts from a higher time frame basis down to a lower time frame basis, and really just sharing what we're looking at in the markets for that day. It could be pound yen, it could be a euro dollar trade, it could be anything, right? But we're sharing our analysis prior to taking trades. And then what we do, which is what separates us from everyone else, is we're then sharing our transparent screenshots of trades when we get into them, plus MT4 screenshots after we take the trades, right? So we're not only sharing daily markups, we're then showing the process of actually taking trades as we've literally just taken them, which is invaluable. And then not only that, you're seeing MT4 screenshots to back up the fact that we've taken them. So it's very transparent, and we have a private chat as well. And, we had a few members in there yesterday showing MT4 screenshots, journals for the month so far, and just overall leading by example by being disciplined and actually sharing the results. And this is what separates it from everything else, right? These people in the next 3 to 6 months will be a force to be reckoned with. And I cannot wait to see their development. And it's just a very transparent place to be, that you can actually be supportive, but we're not going to stand for any BS. We're going to push you to that next level. And on the weekends, of course, we have the weekly market breakdown. So it gives you the opportunity to join live alongside us and go through the narrative building process of monthly time frame down to the 1 hour and below, and formulate that plan so that you're completely ready for the week ahead. But not only that, we'll teach you how to do it yourself, right? So by seeing us do it, you'll be able to do it for yourself. And that's what creates independence within your trading, right? And that's really important because, like I said, no one can pay the bills for you. It's down to you and you only. So what I want you to do is go into the website. So if you go to the website, there'll be a pop-up option that literally comes up in the first 5 to 7 seconds. And if you want to get a free newsletter, you can go ahead and you can put your email in and you can get free value, right? Free value, trades of the week. It could be the best performing pair for that week, alongside the top MLC member for that week. And sometimes as well, we have outlier voice chat as well. So there's so many gems dropped in there from a week by week basis. So what we'll do is we'll literally snip up pieces of that, drop it in there, and that'll be available to you as well. Alongside, any bits and bobs technical wise, it's really valuable. So that's important. And what you've all been waiting for is the discount, right? So I know you've been waiting this entire webinar for the discount. So I'm going to share that with you now. So it's going to be WEB20, WEB20. So if you sign up to the Discord, go to memberships, upgrade to MLC and put that discount code in, you're going to have access and a cheaper price to actually get into MLC before we close it off to the public completely at 30 members. So
We'll go for that quick facts, so we can answer some questions as well.
that'll be good. That'll be good.
Got 20 minutes to answer questions.
Perfect. Good. Is there any questions that come to mind?
No. Let's ask. Let's get some questions in.
Any questions? Any questions on what we've been through on the charts or anything else entirely? Feel free to ask some and we will answer them.
Someone said you're basically building your own version of Falcon.
Okay. Well, we appreciate that Falcon has a good foundation and they teach people the right psychology. And I've been in Falcon for myself, and it was really where I built my foundation. You know, Falcon, I argue, are doing things the right way. They're teaching traders to build with scale in mind. And that's how I was taught to build the markets and come at it from a logical standpoint, right, with scale and scale that longer term. So I agree with what Falcon are doing. So we're just putting our own twist on things and how we trade, our own values, our own morals, and actually scaling things in our own way based on how we trade and our lens of how we view the markets into our experience. So,
Do we have any space for beginners?
of course we do. Of course we do. We have, even without the paid tiers, we have a free Discord allowing you to join. So get yourself in there if you're not already. But even in the paid tiers, obviously there's going to be a cap on MLC, which we just spoke about. However, in Outlier, get yourself in. There's so much value. So much value. For just £30 a month. Honestly. So much value.
Do you still do red light therapy?
Yes, I still do red light therapy. Yeah. For me, it's almost like, in the colder winter months, especially in the UK anyway, UK we get some darker months, don't we, in the winter. For me, that 10 minutes in front of the red light therapy kit just basically makes me feel like I've been in the sun for like 10, 15, 20 minutes. So basically just wakes me up, makes me feel good. It's good for your skin, it's good for your cells, and it's just been really helpful. But it's not going to solve all of your issues. It's just been a small little tweak to basically optimize things further. So, but it has been good. I mean, I haven't used it this week being in Edinburgh, but at home I use it.
Can you share the name of your indicators?
Mm-hmm.
Just very quickly.
For sure.
Switch back to the...
Yeah, we'll do. So the name of the indicators. So I've got personally, let me just change to the 15 minutes so you can see a few of these in detail. So we've got the week and day separator, which basically allows you to see Monday, Tuesday, Wednesday, etc. Then you've got the Asian session range, right? So it just marks in Asia session range if you want to use that in your analysis or your trading. And then we have New York midnight open, which just basically marks out 5 a.m. GMT plus the beginning of New York open session. As for me, I personally use that within my trading, within my style. So that's the three I use. But as you can see, no EMAs on the chart, nothing like that. Just very simple. And just what works for me.
Here's an interesting one. Does your psychology get affected when targeting 10% for prop challenges?
Yeah, 100%.
I've been going through it right now.
Yeah, I mean, Thomas has been going through it right now. Yes, it does. And I think personally it's designed to do that, right? Because you have to think about it. Prop firms are a business, right? So if their business model is for most people to fail, or I'm not saying this is exactly how it is, but this is just my perspective on it. If most people fail, then that's better for them because obviously they get more money, right? So there's going to be a very small percentage of traders that actually pass both phases. So it's designed to test you psychologically, right? So that 10% target, think about the way we view the markets. We're more so process orientated. We think about, right, I get up, I'll trade London, I'll do my journaling, I'll do my weekly ASR. You're thinking in terms of process driven stuff. As soon as that 10% target comes around with 30 days, you're now switching that process driven mode to outcome, right? That's a big, big shift because you're now not operating from a peak performance standpoint. You're changing your entire trading approach to think about outcome now. So you could have had 2 years of consistency, but now you've changed everything in 1 minute by thinking about outcome. And that can shift your perspective on everything. And then all of a sudden you find yourself closing down trades before you even should be. You find yourself just second guessing everything, overthinking things, when the reality is if you just literally stick to your plan, if you've got an edge in the market, you will very likely pass, or you at least get the free rollover and get the challenge to be able to do it again. But, it's designed to test you. And the thing is as well, is the 2 phases. You obviously have the evaluation 1, which is the challenge, and you have the evaluation 2, which is the verification. Think about the difference in psychology between challenge 1 and challenge 2. Challenge 2, you get half the target. So you have to hit, let's say 5% instead of 10, especially on FTMO. and you get double the amount of time. So the amount of traders that I know that have been through that phase and go, right, I've passed the first stage. I'm in verification now. It's easy. I've got 60 days, only half the target. I can easily do this. So all of a sudden you've gone from, performing from a process-driven mode of, I'm just going to take it as it comes and just trade the markets, to this is an easy game. I've already passed it on mind, but you're just setting yourself up for failure. And most people don't even pass the verification, even though it's half the target. So it's a very important and fascinating concept. But if you just stick to your plan, and I think it just takes a case of actually gaining experience with these prop firm challenges and going through a few, maybe with that emotional roller coaster, to understand, right, I just need to approach things how I normally do in the markets, trade the plan, and just try my very best to keep things neutral. And then you've got a much better chance of succeeding.
Yeah. So the next two questions are very similar. What's your favorite book which you would recommend for beginners of learning trading? And then the next question is, trading in the zone or disciplined trader, which one should I read first?
Okay, 2 in 1.
So, 2 in 1 basically.
2 in 1. Okay, let's answer that. We actually touched on this today in the Q&A.
Yeah,
didn't we? Trading in the zone is definitely a staple, right? So you should be reading that for sure, if not multiple times. It's not going to be the answer that solves everything within trading, of course, but this is just a little gravitational pull in terms of the right direction to approach the markets from a good standpoint, from a psychology standpoint, right? So Trading Zone, definitely a great book. Also check out Mental Game of Trading, The Way of the Turtle, Market Wiz's book, and just podcasts. So in terms of a video series that you should watch is the Mark Douglas How to Think Like a Professional Trader series. It's a 4-part series, and I appreciate it's not the most entertaining series to watch. However, it's very important to do that. Speed it up if you need to. And I've got that downloaded on a software, and I just literally listen to that on repeat. So that's key. Also a book that's not related to trading, but for me, it's equated to a lot of systems within my trading, such as a recovery strategy and basically a pre-game mental process before I even get to trades, is a book called With Winning in Mind. Okay, so this is a golf-orientated book, but it teaches the right foundations, helps you and tells you how to build your self-image, and sets you systems in place so that you can basically approach every trade with the same process. Hopefully that makes sense.
Yeah. Next question. What do you think about the idea of temporarily leaving social media platforms like Discord and YouTube and others, and then returning after learning technical skills yourself?
Yeah, I think it's key. Especially from a social media standpoint, right? Because social media is very, very distracting. I mean, we talked about this again today. The amount of people who are constantly comparing themselves to other people, other people's lives. You're just sat there scrolling for hours upon end sometimes with certain people, and you're constantly getting caught up into everyone else's lives, right? So if you're doing that, you could be spending that same time to develop your trading edge or better your psychology or just learn about something, right? So instead of doing that, like you said, log off social media, go ghost mode for a certain point of time. Look back on my Instagram. There's certain times where I'm just don't post for 6 months and I just literally go ghost. It's the best thing to do to just elevate that to that next level, right? It's essentially monk mode. Do monk mode for a period of time where you just do certain habits, get rid of social media for a bit, and just really focus on dialing yourself in to get yourself to that next level in all areas. Trading, fitness, develop your success, get yourself in the gym, health, focus, all of these little things just build yourself into becoming the best version that you can be. And that's a very, very important thing to do. You know, it will change your life.
Yeah. Would you, this is not a question, but would you be able to show how to join our Discord?
Of course, yes. I will show how to join the Discord. So let me just get the tab up. Right. So what we do in terms of how to join, all you do is you go to envisionmarkets.com. I've got it here. Right, you go to here, and then all you do is you click join today, right? Click join today, straight to the Discord. As you can see, you'll get this newsletter as well. So if you want 10% off, obviously you guys have got 20% off if you need it today. But all you do to join is you click join today and it'll take you straight to the Discord itself, right? So as you can see, 1,100 members so far. It's grown very, very fast and we've got a lot of demand for it, but get yourself in, you will not regret it.
Perfect. What impact does session highs and lows have on your trading? And do you use them?
For me, it's just understanding where previous session liquidity is held, right? So it's a target for liquidity. I know that, right, Asia highs, once that's swept, there tends to be a lot of manipulation, especially coming into London open kill zone. So for me, Asia high or Asia low must be swept in order to validate a trade idea. So for me, it's just understanding, right, it could be buy side liquidity from Asia that's been swept. Right, now I'm going to look for that short opportunity based on the manipulation of price. Like you can all see the chart right now, right? So we've swept previous high from Asia highs, clear manipulation in price, followed by the clear move to the downside. So all this is in this area here is just manipulation, right? So it just helps me understand where previous liquidity is held, and then it validates the trade idea for myself. Good questions.
Very good questions so far. Yeah, keep them up. We still have 15 minutes. Yeah, keep them up.
Keep them going.
So, besides the 9-to-5 job, how would you go about getting capital to trade prop funds? Of course, considering you're good technically to elevate you to the next level.
Once again, obviously, if you don't want a 9-to-5 job, just either get a part-time job or get a side hustle and just figure out a way to raise capital. It doesn't have to be a 9-to-5 job. You don't have to sacrifice all of your time, to actually raise that capital itself, but just get a part-time job. I had to do that. I went from a full-time job to a part-time job before even becoming full-time. Go and do it, put the work in. At the end of the day, especially if a lot of us are going to be young kids, like just go and use your younger years to actually work hard, gain the capital. A challenge is only, let's say, it could be 200, it could be 500 for 100K. Just go ahead and do it, Go ahead and do it. And yeah, that's a quick tip. A quick tip as well, actually, is something that I've heard recently, which is a really good strategy, is pay for, let's say, a 50K challenge, which is what, $200, £200. And if you pass that, then use the profits to then pay for the challenges that you're going to do in the future. So if you get a payout of, let's say, 500, £1,000, use that to actually pay for the future challenges. So that's a quick way as well to speed up that progression. Something that I didn't do, but it's a very good tip to do.
Yeah. How many trades do you usually take weekly? Do you cap them perhaps to a certain number daily? Obviously, this week has been a bit of a crazy one.
Right, so this is a good question. So once I don't put a cap on how many trades I can take per week. I'm not going to sit here and say, right, I take 3 trades every single week. You know why? Because the market doesn't work like that. The market could go through a very busy period where you just taking trades every single day, very much like this week, where I've literally taken a trade every single day, which is very rare for me. But all trades fit the plan, and that's the most important thing. But there's weeks like last week where I think I took 2 trades, and there's weeks where I don't even take a single trade, right? So it's important to realize within your mind that, and this is where the wage mentality comes from, of you think you're going to get a certain amount of trades per week, per day. It doesn't work like that. The market is completely random. The market's going to go through ebbs and flows, different cycles. So for you to say I'm going to get 10 trades every single month is a myth, in my opinion. And it's something that does not work well for me. So good question. On average, I'll take probably between 10 and 15 trades a month, but it can vary from side to side. Per day, actually, in terms of per day, I have a rule in place where I can only take 2 losses on a single day. So let's say for some reason or another, I end up taking 2 losses in a day. I'll literally just shut the laptop down, don't care what's happening on the charts, and I will pack up for the day. Because capital preservation is king.
Sweet.
Something I had to learn the hard way.
Yeah. What do you mean when you say manipulation?
Okay.
Can you expand on that concept?
Right. Well, a lot of traders come into the market and they are looking at similar levels, right? What do you do when you come into the markets? You look at similar support and resistance levels, and support and resistance can work really well, by the way. I'm not disregarding anything to do with that sort of style. But let's say you come into the markets and you have a support and resistance level of, let's say here. Let's mark this up together. Let's say it's here, right? At the 1.09 area. Right, so the bigger players within the market, right? Everyone has different analogies when describing these people. I'm not saying the banks, I'm not saying anything. I'm just saying the bigger players with the bigger money in the market, they understand that if someone's trading from a, let's say a resistance area and they've got stops placed just above, how easy is it for them to then just drive price, basically manipulate everyone out of the trade before then dropping price, essentially, right? And this happens all the time. You see it from an hourly basis, you see it here, right? So you get this little intermediate low, it's then taken out, manipulation, before then price drives higher. Once again, intermediate high, price comes down, sweeps that previous high with that manipulation, before then coming to the downside. So once again, go back and backtest this. This happens all the time. We can see this here. We see this on every single time frame, and it happens on a day-by-day basis. So to solve that, if you can understand, you know, where these areas are of liquidity, then it positions you in a standpoint where you can almost see in advance where these areas of manipulation are going to take place, and then be able to take advantage of that based on your entry criteria. So good question. You know, you see it here as well. Go and backtest it.
Sweet. What advice do you have for people that are still in school and will have the summer off?
Oh, grind it out. Grind it out. Honestly, it sounds very cliche to say, but if you know, I mean, what we're in now, April, if you've got the summer off, you've got a good few months to get your head down. Literally, like we talked about before, someone asked a great question in regards of like ghost mode and coming off social media. Come off social media and just really dial down your trading and get every area of your life to that next level. Get yourself in the gym, eat healthily, position yourself around the right people, focus your energy on developing your trading skill set. And over those 3, 4, 5 months, you will be a completely different person. I'm telling you. That's my advice. Focus on you. Ignore everyone else's lives.
Nice. Are you able to break down a typical day of your life?
Everyone loves the day in the lives, don't they?
Yeah, of course. But, you know, you're just saying
Okay.
it, you're not having to show it.
Yeah, of course, of course. So what does a typical day look like? Well, let's think about it. So I end up getting up around 5:45, so pretty early prior to London session, which gives me like, you know, an hour and a half to just get ready. Basically, obviously have a shower. I always finish my shower with a cold shower as well. So I start off warm, something I've talked about in previous videos as well. Finish off cold, which just obviously shocks the body. It's more the mental preparation for me of just the fact I hate cold showers, but I'll still do it anyway. Go downstairs, have a coffee. So it tends to be black coffee. I intermittent fast in the mornings anyway, so I don't eat until around 10, 11 now. Used to be like 1 or 2, but I'm trying to put weight on, so now it's like 9 or 10 to get the calories in. But that'll be that. And then around 7:30, I'll jump on the markets, right? So I'll prepare for the markets that day. I'll do my markups. So I will start on the daily time frame because I've already broken down the markets for the week. So I already know where price is on multiple pairs. And I'll go from the daily time frame down to the 4 hour, the 1 hour, the 15-minute, and start to formulate that narrative for the day ahead, right? So this is a process that's already within my trading anyway. And then I'm putting those markups inside Envision. Obviously, MLC guys can learn from that. They can build their own analysis as well and learn from that in the moment as it unfolds. So once the markups are done, I'm obviously ready for London session to take place. So I kind of have a very clear indication of, right, pound yen's going to develop today, you know, like it could be in the next session, it could be New York session. I understand when price is in a high value area or coming into a high value area. I will check news before London session opens as well, just to be aware of like CPI, NFP, FOMC, PPI as well, and any significant red flag news announcements that could potentially essentially mess with my capital preservation rules. So just need to be aware of that. And then once London happens, obviously 7:38, I'll just be dialed in for the next 3 hours until 10:30. And then that tends to be the point where I'm just kind of having a break, cracking on with other work, getting some food down me. And then obviously New York is 12:31. New York is a bit of a funny one for me, so I'll choose whether or not to trade it on the day. So I really focus on London, but if nothing shapes up in New York for me, I will just crack on with other work. But if something's forming in New York, I'll obviously be really focused on trading, and I'll trade New York and see if anything actually forms. And then after that is when I hit the gym.
Sweet. Can you quickly expand on deep work? What that means?
Deep work, yeah, of course. Good question. These are solid questions. Hang on, dry mouth. Deep work, right? Well, think about it this way: when you're working, how many times do you just have your phone by you? Right, it could be not on airplane mode, and you're just getting very, very distracted. Deep work is focused work sessions when you do not have any distractions. Right, your phone's in the other room, or it's on airplane mode at least, and you're just so engrossed in the task that you're doing, and you're just getting on with it, right? You're not distracted by people coming into the room, your phone, emails cropping up everywhere, notifications. You're just completely dialed in. Deep work is such a good technique to use, right? And a concept as well, which is really important with that, is use the Pomodoro effect of having timers with it as well. So maybe do a deep focus work session for an hour straight, then have a bit of a break, go and get yourself a smoothie, go and do some stretches, some laps around the room or something, and then crack on again. And you just repeat that throughout the day. And before you know it, you'll get a lot more done than what you think, right? And you back that with no social media, focusing on yourself, exercising hard. Oh, you will level up.
Yeah. All right, 2 and 1 again.
Okay.
So once funded,
Yeah.
do you still trade the same risk as you were going for the challenge, or do you drop down? And then the second question, any profits you make from prop firms, do you trade some of that money as a corporate account or personal account also?
Okay, so first question. So it's kind of 2 in 1, but kind of separate as well. So first question, what was the first one again?
So once funded, do you still use the same risk?
Okay, right. Well, my perspective has changed a little bit now because on challenges, I risk 1.5% per trade, just because I understand that every single month it's not realistic to hit 10%. You could have a strong month, right? You could hit 5% profit, but for you then to not hit the 10% target, it makes much more sense to up that risk a little bit to 1.5. Then the target becomes 6.67 if the target was previously 10, and it's much more achievable quite quickly as well. So that's something I'll do. But once you're obviously funded, then just drop the risk right down, like to 0.5, 0.25 to start out with, and just basically get comfortable with trading that amount of capital. That's a big thing, because if you go in with 1% risk or 1.5% risk on a funded account, as soon as you start making mistakes, or if you do make mistakes, it's going to go downhill very, very quickly. So personally, I would draw that risk back until you're comfortable, and then just build into it. And, there's no rush. There's no rush to get a payout. I think people, as soon as they get funded, they want to risk 1% and get that 10 grand payout or that 5 grand payout. Take your time and take it slow, and then you'll be more thankful of that in the future. And then what was the second question? I will personally, so I will use a portion of those profits to put back into my personal account to then obviously scale that. That's the goal. Our goal is not to rely on funded accounts, right? If these funded accounts and these prop firms disappeared tomorrow, a lot of people would not have a leg to stand on. So portion a percentage of the profits back into your personal account is definitely a good thing to do. So I definitely do that, and then a portion of it just goes back into the bank account and just obviously scales that as well. So that's what I do personally. But good question.
All right.
Great question.
One more.
Okay.
You can take a drink of water first.
Okay.
I'll allow it.
You'd be surprised,
I hope you're enjoying it. I hope everyone listening is enjoying it as well.
Yeah, hope you're all enjoying the questions so far.
So this one's a bit of a longer one.
Mm-hmm.
So first of all, congrats to your success, Michael.
Thank you.
But you say smart money. Do you stop loss hunt for retail traders? Do you really believe banks and institutions care about a very small market share?
Interesting question. I think they can obviously there's algorithms that control the market. There's different perspectives on things like that, and I don't want to go too involved in it because everyone has their own perspective. However, people understand from the psychology of traders where stop loss is going to be. I don't think they care about individual trades and, like you said, small amount of volume on these highs, these lows. But because that manipulation takes place, a lot of traders are taught in the exact same way. So I do think manipulation is a real thing. We see it in the live markets all of the time from a day by day and week by week basis, right? So no, I do not necessarily think they care about smaller capital, but manipulation definitely takes place before, and it acts as a driver for price, right? If you watch price prior to NFP or a CPI, what you'll see is a lot of buy side or sell side liquidity being stacked, and then you'll see that manipulation take place. So you see the false move, and then they'll just drive price, right? So it's something to really, really pay attention to. So, it doesn't matter what style you trade, manipulation is always going to be a thing that takes place. It's just being aware of it. You don't need to take advantage of it or anything. Everyone has different styles. And this is where the SMC space is quite toxic in a way, because a lot of people think that right, SMC is the only way to trade. I disagree. There's always going to be pendulum swings in the market and people's psychology. I've seen multiple phases of support resistance to patterns to, price action, SMC. Now there's algo terms being thrown around. There's always going to be a new style that people gravitate towards and people approach from that shiny ball syndrome perspective. But at the end of the day, it doesn't matter what style you trade, there's always going to be manipulation there. It's just being aware of that. But if it doesn't impact you, there's no need to obviously be aware of it. If you have a trading plan and you're consistent with it and you don't need to know anything about manipulation, honestly, just keep doing you. Just keep doing you. But if it's something that is happening all the time when you're trading, then obviously self-awareness in that and what is actually taking place is vital. Great question. Solid. We've had some solid questions.
Apparently the Web 20 code isn't working.
Okay, well we will sort that as soon as possible, won't we?
Yeah.
We'll sort that as soon as possible and get it over to you, and it will be working very, very shortly, so don't worry about that. But overall, it's been a fantastic webinar. I hope you've all enjoyed it. I've enjoyed my first live webinar with you all. That code will be working very shortly, so
we'll get that sorted literally right after we're
yeah, so don't worry about that. Try it in the next 5 minutes and it'll be working for you. And like I said, hope you've all enjoyed today's webinar. Hopefully it's made you think about scale in a different way. People are very, very silly nowadays in the SMC space, targeting these bigger RRs like we touched on before. Really think about things from a logistic standpoint, from scalability. Think about things longer term. So that's the key lesson today. And make sure you do that homework. I want to see it, right? I'm going to keep you all accountable. So drop that in the chat. Hope to see it in general chat very soon. And yeah, we're going to tune out this webinar now, but have a good weekend, everyone. And we'll see you all soon. Yeah.
Yeah, I'm just fixing the...
Okay, we're just fixing it now.
Yeah, it's just let people, just while you're here, just let them see if it's working or not.
Okay, we'll fix it now for you guys. But hopefully you've enjoyed the webinar. Some great questions regarding funding and everything else as well. Oh. But yeah.
All right. Hey, can you ask people to try using it now?
Guys, if you try using the Web 2.20, not Web 2.0, excuse that. If you used Web 20 code now, give it a go. It should be working.
Let us know in the chat.
Yeah, please let us know in the chat and we will guide you to hopefully making it work. But don't worry about it. We'll get it sorted either way. It's working.
Can you go over the homework real quick before we end?
Of course. Right, so homework. And once again, like I said, I'm keeping you accountable. I want to see this because this could drastically change your trading. So choose an individual pair. It could be Euro dollar, it could be gold, it could be US 30. Backtest 3 months of data. And instead of using your current management style, use a 3-to-1 risk to reward of set your stop loss, set your entry, set your TP, and take the trades and just literally close it at 3-to-1 automatically. Collect that data and drop it in the Discord after 3 months of data. And I want to see what your results were before or would have been before with your current management style, and then what it would be now with those 3-to-1s and how it's changed your trading, right? And what you'll find is probably an increase in strike rate, win rate, more consistency. It's going to result in less stress as well. It's such a simple solution, but no one seems to be thinking about it because their ego is attached to these large RRs. But that's a very big problem in the trading space right now. And it's something that I had to learn the hard way too. So learn from that and learn from my experience in doing this. And I want to make sure you all do it as well. So get it done, please.
That's it. All right. All good. It seems to have worked.
Perfect. All good. We'll see you inside Envision. And this Thomas.
Yeah, see you in a bit.